So I'm going to go real fast. Okay. So what we said basically the other day is that there is a reason to optimize, and there is a lot of money. Oh yeah, John, but you were in Moorgate, right, John? I remember you were sitting in the front row. So it shouldn't be that difficult. You at least heard what we do. We are going to bring, if we are very lucky tomorrow, we are going to have the videos online. I don't promise, but we're going to try to have all 3 videos online tomorrow. If not, it's going to be next Monday. Okay? We have a very big event tomorrow. It's the round-the-clock trading. We're going to participate in it, and which is kind of exciting because it's quite a big event. Over 1,000 people already registered, majority from the UK. I'm going to be the closing lecturer, and it's going to be at 8 p.m. London time, and I'm going to talk for 1 hour about Edge, that very elusive concept, and I hope you're going to be there. I'm going to give you the link later, but let's get to the important thing, which is optimization today. And it's very important that we understand that we need to optimize because no trading system has the right parameters from the factory, and they improve a lot through optimization. So we saw the last course that the more parameters you have, the more complex it becomes, the optimization, that there is not just one optimal. Okay. In the meantime, I set it up myself. I'm not going to just continue on the theory. I lost the slides. It doesn't matter. Majority of the people here were the other day. Anyway, we'll put the video up. So I'm going to continue with the practicals. I set up. That's good. Okay, I'm happy. Sorry for that. Yeah. I want to get the aspect ratio properly. So we have a, you need to the recording. No, you need to watch the recording there. Yeah. This is the line. Okay, let me 1 second. Set it up so we get a good video. Yeah, that's correct. Yeah. Okay. So I'm going to continue on the point I left it the last day. I don't have the slides anyway. The main point here is we are learning an algorithm which is called hill climbing. And hill climbing is an algo that is very, very, very useful. And you need to learn to do it manually, okay? Because it's not programmed in MetaTrader. It will bring you to very good optima very quickly, and it will tell you whether the trading system makes any sense or makes no sense once you learn how to use it. So it's something you need to practice at home. The good thing or the beauty about it is most of you have the EA. I already set up the parameters of the last day. That's why it took me a bit of time. I already put the lot size at 0.39, and I'm just going to continue. Today I wanted to do the other EA as well, so I'm going to do mainly practicals, okay? I'm going to continue at the point I left it on Monday, okay? So I have the same lot size, 0.39, you see that here, and I have the parameters, which were, I did only 3 parameters, if you remember. I did only these 3 parameters here, which is 32 for the stop loss, 23 for the take profit, and I ended up on a moving average of 45, and it gave me quite a good curve. And I was absolutely not finished, but we were already talking money here, right? Because we wanted to reach a point where we would get more than 9% per annum. That's the minimum I will accept on a trading system in a back test, and I got to the same results here. Not exactly the same because I have a different historicals here, but pretty much similar, okay? I had the exact same results on my other computer. The problem is I don't have the historicals perfect here, so I'm going to continue from here on optimizing, and we're already getting here 119% over 9 years, above 9% per year, okay? So this is the point where we left it, and I'm going to continue. The main thing is that you need to understand is why I do these choices. I sometimes choose one parameter above the other. It takes a lot of practice. In the paid education, we work extensively with this. We are really, I would say, extremely pedantic process because it brings us to very good optima, and this is the main part you need to understand before you can launch a genetic algorithm, which I hope to explain in another webinar, but that we explain extensively in the advanced education. Dave made a question here. Yeah, it's okay to optimize the scalp on open price for a very simple reason. I'm going to show you now why. And while you can ask other questions, because this may take a bit of time, I'm going to do the same back test on every tick. And you will see it's going to take maybe 5 minutes. Maybe I will stop it earlier. But the main thing is that you will see that the results are very, very similar. Okay, normally a scalper should be optimized on every tick. That's true. But this scalper is programmed on open price. So I can just skip the hours and hours of optimization that it would take me to work on just every tick. You see, even the loading is taking ages. It's a laptop. So the main point is that you guys do it at home because it's going to take too much here. And we do it before in a part of the process that we call model testing. We test all 3 models, and then we decide if we can optimize on the fastest one, which is open prices. And the other reason why I can optimize is because, this was the mistake. It was M15. Now we'll get the same result. It's because I have a very low time frame. Okay, I'm trading here on M5. That means that every 5 minutes I'm checking the rules of the trading system. So I'm very, very, very close to every tick. Here we go. Now I got the same result. That's why I got a different result. See, this little mistake I made today, because I just changed computer, can change everything. I cannot miss anything. I cannot change the time frame because I changed computer. I did the first back test on M15. Of course, the result was completely different, or not completely, but 20% less. I cannot make a mistake on the spread. I cannot make a mistake on the dates. See, I'm making here a mistake on the dates, actually, because I don't have historicals beyond this point, because I didn't use this AxiTrader platform since I left London, right, which was on the 26th of October, if you remember well. So these little discrepancies come from making a little mistake. If I miss here the pair, or I miss the time frame, or I miss the spread, or I miss one little parameter here inside, I will get different results. Okay, so you should have very similar results to me if you finish on the 25th of October. Okay, so this was the last point, and I'm going to continue from here onwards. And I want to have time today to go to the second EA, so you understand both EAs. Most of you have the robots. Some of you have not funded accounts. If you don't fund the accounts, you don't have the password, which makes no sense. So go ahead and fund the accounts so you can start trading. So the distance from the moving average is very simple. That's a filter. What it does is the following. I check that the price, for example here, I would be having just any price, just as an example, right? And I have here a moving average that I optimize on 45. Okay, it's not a simple moving average, but whatever, it's a moving average. So in order to confirm a trend, one thing we traders do is that we say everything, if the price is below the moving average, we have a downtrend. You know this, but I show it one more time. And if the price is above the moving average, we have an uptrend. Sometimes it's just ranging. It's not very, very clear, but here it's very clear. You see the price cut above, and we have an uptrend, right? Okay, but we use an additional filter. We say, okay, the price is below the moving average, but additionally, we want it to be a certain amount of pips. In this case, 20 pips. In this case, 17 pips, you see, below the moving average. That's what this variable, what this parameter means. And right now the value is 20. So we have an additional confirmation that we're really 20 pips below the moving average. So we really confirm it's really downtrending, or 20 pips above the moving average. So we have a real confirmation that it's uptrending. That's the name of this parameter, okay? So when you see here SMMA distance, it's in pips, and every point means 0. It's a downtrend if it's exactly just the price below 0 pips below the moving average, and 20 means I need additionally 20 pips below this to confirm that it's trending, because this scalper is only trading in the direction of the trend. You should know this. It's a scalping system which is trading only in the direction of the trend, okay, of the main trend. it's not a very long trend because it's 45 periods of 5 minutes, right? So that would be 45 times 5, 250 minus 5, 245, right? 235. 45 times 5, 90, 180, 235, right? 235 minutes, which is divided by 60, 4 hours, a bit less than 4 hours. Do you follow? 45 periods of 5 minutes. Just do the calculation with me, okay? You need to think always in higher time frames. So 45 periods of 5 minutes, 225 minutes divided by 60 is a bit less than 4 hours. It's 3 hours and 45 minutes. It's confirming the trend of the last 3 hours and 45 minutes. It's gonna only confirm this, and if it's going up, it's gonna do buy trades, and if it's going down, it's gonna do sell trades only. Okay, and this distance is just an additional filter. Okay, so is that understood? Is that clear? Otherwise, it doesn't make sense. I optimize this parameter. People don't follow what I'm talking about. Please write yes or no. That's not clear. No problem. I repeat that again. Very good. But only Paul, the other people, Dave, the usual suspects. And the other people, new people, don't get worried if you're new. Sashi, Karim, I think it's new. Ben is not new, but it's new to the webinars. And other people here, Evelina, whatever, new people to the webinars. This is the system that we gave out in the venue. I don't know if you work, Karim, in One More Gate. This is a system we give out for free once you open an account with AxiTrader. I don't have the slide here, but I can explain you later by email. Okay, it's 2 trading robots. It's called T2F. It's a scalper and a trend system in one code. It's 2 robots in one. Okay, so just follow the webinar, Karim. Don't worry. Just understand as much as you can. You'll get the videos. Okay, it's all explained in the videos, and probably for the next webinar next Monday, you will understand the whole logic once you watch the videos. It's really not that difficult. Just follow from where I continue now. Okay, so I'm going to start to optimize this parameter. It makes sense to make a negative value here and put minus 5 points from the moving average, because that would be the opposite direction, right? Okay, so I want it at least to be 0 points distance from the moving average and maybe 30 points, 30 pips from the moving average. Smart people. If I put more pips, am I going to get more trades or less trades? The further I confirm the trend, this additional requisite, if I put 20, will I get more trades than if I put 10 or less trades? Question for the smart people in the room. Less trades, Dave. More people voting here? More opinions? You can be wrong. You need to learn. Only one opinion. Okay, he's right. You'll get less trades because you're filtering out a lot of trades. And this is very interesting because sometimes you don't know the EAs you're trying, and you need to think in terms of reverse engineering. I'm now testing all the possibilities from 0 pips. You see, from 0 pips, I get 3,000 trades and 69% profit, which is not that great. I was already at 130 or 100, whatever more money. You see, the more distance I get less trades. That can be only 2 things. It's either a filter, when I get less trades or more trades, significantly. That means when I pass from 3,000 trades to 2,000 trades, what's happening? It's either a filter or an entry rule. It's never an exit rule. Never. Even if I don't know what the parameter means. Let's say I just get a black box. I just got some code in internet which looks promising and I don't really have a clue what it does. I can do reverse engineering, and I teach you that, guys. So right now it's obviously a filter or an entry rule. It's the only thing which can pass a trading system from 3,000 trades to 1,600. It's a 50% decrease in the amount of trades. So you need to watch a lot at this column. If it's an exit rule, it's going to make a very little difference here. Because if you stay a little bit longer in the market, maybe you have 10 trades more. Compared to 1,500, you maybe have 1,520, 1,540. But if you pass from 3,000 to 1,400, it's a filter or an entry rule. That's the only possibility, okay? Just by reverse engineering. Do you follow that? That's the first thing you need to know. Is that clear? Okay, so now we do the usual. We order by profit. We don't choose necessarily by profit. We go to the benchmark. We remember we were doing 125% profit because for the newbies, I repeat that, we have a $10,000 account. That's crucial. Even if you're trading in pounds sterling, I don't care. You need to always backtest in dollars because the dollar is the reference currency in the Forex market. What is the problem if you would be doing this backtest in pounds? Let me tell you one thing. MetaTrader, I could do it perfectly here. I go here. I'm living in London. Of course, I will try to do it in pounds. If I'm living in Spain or in Germany, I will do the backtest in euros. If I'm living in Switzerland, I'm doing the backtest in Swiss franc. Why? Because my account is referenced in this currency. Wow, big mistake. If I do the backtest in pounds, whatever, let's say I didn't open 10 grand, I just opened, I don't know, 6 grand, 3 grand, or the offer, 2 grand, and I would like to do the backtest. The problem is that I'm doing a backtest since 2007, but MetaTrader is calculating the internal change because I'm trading here euro dollar in a pound account, right? That's the reality you have, guys, right? I mean, who open of you an account in euros or in dollars? Nobody. Everybody open in pounds, right? You're living in UK, no? Okay, so the problem is that I'm calculating the change from the pound to the euro or from the pound to the dollar from today. They only give the date of today. So the problem is if I want to have a trade in 2007, believe me, the exchange rate from pound to euro was completely different in 2007 than in 2015. So it's such a huge mistake of concept, and people don't know MetaTrader, to do the backtest in pounds, in euros, in Swiss franc. Do you follow? Is that clear? That's why we do the backtest always in dollars, because then we don't have this internal conversion error. Okay? Imagine I had a trade in 2007 and I made $32, and I'm converting this $32 into pounds, but I'm converting this into pounds with the exchange rate of today, of November 2015, which is a huge mistake. You understand? So don't do any backtest in pounds. It's a huge mistake. Don't do any backtest in euros. Don't do backtest in Swiss franc. Okay? Good. So we did this already. We clarified this. And we go back to the benchmark, always in dollars. Okay? And we had 125% earnings with a 17% drawdown with a maximum risk of 1.26%. I'm just moving the comma 2 times for the new guys. Okay? And I'm getting percentage. I'm getting here 17.34, maximum risk per trade 1.26, median average risk per trade, average, you see that? Sorry, risk per trade 1.07, and I'm earning 125% over 9 years, which is quite okay. And I have on this streak, on the worst losing streak, 6 losing streaks, trades, sorry, make a streak of 7.5%, which is below my 15%, which I can maximally accept. This is my benchmark from the other day, and I'm already doing much, much better because I'm getting 146% with a drawdown of 14%. And I only made a minimal change. I passed from 20 pips distance from the filter to 17 pips distance. I'm getting a few more trades, but I'm getting 140 trades more. But these trades are mainly profitable trades. You see? And I'm making a 20% more in 9 years. That's a 2% per year. So I'm now already at 146 divided by 9 years. I'm getting a 16.22% average yearly return on one pair on the euro dollar only. Double click. If you have this at home, just follow, start. I do the backtest again. And remember, on the left side, I'm going to have always optimization. These two tabs are optimization. These three tabs are backtesting. And this is just basically the journal to see problems in the errors in the code. And you need to remember always that in manual optimization, we jump from that's the laptop, I'm sorry, I cannot drop that down. I'm going to try to find space here. And here we have backtesting. Don't confuse, because when I say always go to the graph, there's two graphs here. There is one graph, this is the backtesting graph. That's the single line in an optimization. That is this graph. And this is all the lines. That's a very different breed of cat, and people confuse it, okay? So you are always jumping between both sides, the optimization side and the backtesting side. And that's the beauty of MetaTrader 4 and MetaTrader 5, that you have both in one. If you go to TradeStation, if you go to Ninja, if you go to Visual Chart, if you go to whatever platform, you don't have this all in one. Okay, let me tell you that, because what we're doing now in MetaTrader 4, you cannot do in other platforms. Okay, and certainly not at this speed. We are having 650,000 candles. Okay, sorry, I put 2,000. This was a mistake that I left from before. So it's 10,000. Okay, for the new people, I'm using 10,000 because 100 times 100 is 10,000. So it's very simple to get percentages just by moving the comma twice. How are you doing, new people? Ben, Sashi, Karim, you okay? Okay, next parameter, that's fixed, and I have less roughness because my profit factor went to 1.26. Okay, if I'm too fast, just stop me. I'm trying to reduce the drawdown even more so I can put a bit more of lot size, as I have a bit of room here to risk a little bit more, only just slightly. So next parameter, and I'm going to try to do the full squeeze of the orange. Okay, the Williams is right now, that's the percentage of Williams, period, percentage. It's a very good indicator developed by Larry Williams. I would recommend you to study it in Investopedia. It's a very good, let me see if I can Google here. I'm sorry, this is not very good. It's cutting off the screen for the video, not very good, sorry. Let me try to solve that. More or less. Getting there. 1 second, because we are recording and we want it to be neat and beautiful. Okay, Investopedia is a very good place to learn. Okay, I just Williams percentage. You will understand that. Do you know the story of Larry Williams? You should really check it out. It's a fascinating story. He won a Traders of the Year, whatever. He made an incredible percentage just scalping, and he taught the strategy to his daughter, and she also won the competition. And he has developed quite a few indicators. Williams percentage. Here it is. I'm going to put it here. And this indicator is a very reactive indicator for scalping. Okay, and the robot I gave you has the indicator inside. I'm putting the link in the chat. Please check it out if you got it. Just write me in the chat if you got the link. And you should study this indicator. I'm going to explain you a little bit how it works. I'm going to show you here. It's a very reactive indicator. You see, very different to, for example, an RSI. RSI is very, very, very slow in reacting. I'm going to put here a lower time frame. So you see here the difference. Okay. So I'm going to put here M5, which is the reality of what we are trading here. And I'm going to put here euro dollar. This I don't need. take it out. It's only confusing here. Oh, here I have Williams percentage. No, I don't have. Okay, whatever. So you find the indicator here. It's maybe Williams. No, it's not Bill Williams. It's Larry Williams. So oscillators, Williams percent range. And right now I think the parameter, do you remember the parameter where it was? You got the link, great. Just study it at home, a bit of home study, check in Wikipedia your indicators, study them, you have the formulas. Well, if I don't remember, I'm going to check it out one more time. I just forgot the period. I have a Williams percentage of 18. You see that here? Okay, so I'm going to put the same here. 18. And well, I usually take aqua, and an oscillator just moves between two very clearly defined levels. In this case, Larry Williams, the Williams percentage moves from 0 to minus 100. Okay, and it's extremely reactive. Let me show you just to compare an RSI. It's a completely different formula, and just check only how reactive. Well, in this case, you see that Williams percentage already touches here the oversold level, so it's moment to buy here, right? And it already touched here in this example, while RSI still in the middle, and it's just fiddling around. You see RSI. RSI is a very bad indicator for scalping. And I'm amazed how many traders, and I saw it in the UK, are teaching trading systems with RSI that are for scalping. And I wonder, how are you going to make any money if the RSI is still daydreaming, while Williams percentage already got there and went back? RSI still never arrived. You see, because you normally do it, the confirmation is above this level of minus 20, for example, and below this level of minus 80. That's the standard. And in an RSI, you will take the level of 30 and the level of 70 to confirm. And I just make this exercise at home, put them together, and while Williams already was there, you see beautiful entry point to scalp. Do you see that? If I make a sell trade here, I go for 8 pips. Beautiful. But only Williams gives me this, you know. So this man, he won the competition because of this. It's an inverse CCI. Just read Investopedia. I don't want to confuse you with too many formulas and definitions, but even if you would scalp this manually, you would be making money. And the next trading system I'm going to show you on Monday at 7:30 next Monday, it's based on Williams as well. I love this Williams to scalp. I've tried a lot of stuff. I've tried stochastics. I've tried RSI, many other indicators. And there's nothing like a Williams percentage to do scalping, but you need to know how to use it. So, was this clear what we are doing now? We are moving the Williams percentage parameter, and right now we are moving just the period. What's going to make, smart question again, I have a period of 18. Before I change the period, if I put a shorter period, is it going to be more reactive? Is it going to move faster? Or is it going to move slower on a shorter period? Faster. Very good, Paul Pierre. Very good. So you should know that if I put it here, I will get more trades as well. Yes. And they're going to be faster. Okay? So if I'm right, let's see if it's true. So I'm going to go here. Now you will see later a bit the beauty of the, I'm going to keep here, I have this a bit manic. I need to see here the euro dollar, you see. That's my little things. I need just to know what am I optimizing in the moment, because when I change screen, I don't see here euro dollar. I can make this smaller. And I want to see the screen, the bigger the deposit, the biggest deposit, a bit bigger, because I want to see the roughness of the curve. So I'm going to now optimize here from 2 to 45. Beyond 45, Williams percentage, the period, it's going to be just very flat. It's going to become like an RSI. Make the experience at home, play with it, even trade in the night with it if you want. And you're going to catch some very good trades. If you want better, wait for Monday till I give you the full trading system. It's another trading system that has Williams percentage. So I could go here to journal to check if my spread is okay, 1.7. I cannot explain it again today why 1.7. The optimization is started. That's perfect. And look at that. I'm losing money if I put it too fast. So it's very sensitive. It's very, very sensitive. That's the first thing. I need to watch the figures. I need to understand, and I need to understand the trading system. I need to understand that a Williams percentage of 2 and 3 lose money, and suddenly it becomes very, very, very profitable, and I'm very fast at 147 percentage. But the bad news is I'm very close to a cliff, because a slight change in the Williams percentage, and if you remember the definitions of the other day, I shouldn't be too close to a cliff, but it's a very big difference from making 140% to 180%. Do you see that? I'm making here 180%. Yes, you need to subtract 10,000 every time because we are having the balance. Balance is 10 grand plus the earnings, right? So what we see here is balance plus net profit. Balance equals deposit plus net profit. You follow? That's what balance is. I'm just subtracting every time 10,000 in my head. And I'm moving the comma twice, so that's why I get here 189%. And that's why I get here 149%. I'm making 40% more with that very slight change in the Williams percentage. That's good news in money terms. That's bad news in optimization terms. You see, Williams percentage of 10. I move it slightly to a Williams percentage of 9. I don't know where 9 was here. And the difference is 50% over 9 years. That's bad news. It's too sensitive. But that's what it is. I just need to understand that some parameters don't climb steadily. Some parameters are very much hilly. I don't know if this word exists in English. Very hilly parameter. I think you may understand the meaning of what I'm trying to say here ironically, right? So be careful with those parameters because they are very close to the hill, so I can only choose one of these two, right? Do you follow on that one? Very sensitive parameter. Okay, obviously I'm going to take this one. I'm making 192%, but I'm having 18% drawdown. I'm having almost 3,000 trades, and my benchmark, I was having 1,600 trades. So maybe I shouldn't go up there, and it's a very difficult choice now because I'm losing a lot also in the curve. This is very rugged. I'm getting a profit factor of 1.21. I'm going to run the back test so you see that. But I already know in advance. I know the system by heart. I'm training the system 4 years live. I know it like really well, okay? And Olga's an expert optimizing this bot. You can put her there just with a cup of coffee, and she's going to get a parameter. You will see that if you happen to come here. She's going to get a parameter in half an hour, very fast, no matter which pair, no matter which time frame. But the point here is we are losing a lot of money and we are losing a lot of efficiency because before here we were making $9 per trade, you see, the expected payoff. And if we choose this one that makes more money, we are only making $6. It's going down even to $4 per trade. So I cannot do that. I'm going to order now by profit factor, and I'm going to make another choice. Of course, this is a better profit factor, but I'm losing a lot of money. I'm only having 80%. So it's going to be either the original value, 20, or this one. This is a better choice, 18, which is the original value. You see, I stay where I was. I cannot change this parameter because I'm going to pass from 1,600 trades You see, this is the original value. If I'm too fast, stop me, because I'm very used to do this. To 2,900 trades. And we saw it in the screen, right? I made a question. If I just put it a bit faster, will I get more trades? Definitely. You know, so be very careful. You should start with this parameter. A little adjustment in the value of the Williams percentage range. Williams percent range, that's the real name. And here you have it. It's really risky. Okay, so be very careful if you do that. Okay, so nothing. Next parameter. Sometimes the best choice is to do nothing in trading. Okay, let me explain you. The next three parameters, it's an internal formula. I cannot give you the formula. It's an ultra smart formula. We are used always to get the levels defined in terms from 0 to 100. In this case, Williams percent range is going to be from -100 to 0. But no, this time the parameters are going to be defined in a formula. And I'm not going to get -20 or -80. I'm going to have here an internal formula, which I cannot give you, sorry, which is these three parameters. But what I'm moving is the general level, the formula that will calculate these other two levels, the top level, which is the upper line here, you see, which is going to determine the sales, the sell trades, right? And the bottom level is going to affect the buy trades. Do you follow? So these three parameters are going to move these lines, these white lines. I don't know if you appreciate them now. Maybe I should close here. 1 second, let me close this. And what I'm moving here is basically with an internal formula, these two white lines here. Do you see them? I can go here to the indicator, and I can decide, instead of having the levels at -80 and -20, I could decide to make it more choosy. And now I'm going to enter very less trades, you see? And only up here I'm really entering a trade, and only down here, really here, I'm going to enter a buy trade. You see that? Just by moving the levels, the top level and the bottom level. That's what this parameter is going to do, but it's doing it very smartly with an internal formula, which is determined by the first parameter, which is called O level. Okay? So that's what I'm going to move now. Okay? So I'm going to put here 1. I'm going to go here up to 45 or even 65. And I'm going to leave the other two levels, although they have interconnection. I'm following the hill climbing algo. And what is very, very important when you follow this algorithm is you don't cheat. Because some people say, well, these three things go together, I'm going to optimize them together. Well, wrong. If you're doing that, you're optimizing by blocks. And if you're optimizing by blocks, you are not doing hill climbing. And if you're not doing hill climbing, you are not solving the Rubik Cube to get a very good solution. You are just cheating on yourself. You want to be just fast because you are not patient enough. And you're doing a big optimization mistake. Okay, because some people say, okay, whatever, let's say the moving average. Yeah, the moving average is related to the distance, right? Okay, let's optimize this together. Let's optimize together the stop loss and the take profit to get a result. You know what? You're cheating on yourself because you're leaving the other ones stable, unmovable. Then better you go one by one. We tested this, and optimizing by blocks is not the best way to get good results fast. It's just a way to understand something, but you understand much more if you move them one by one. Okay, so here we go. 1165. Start. Some questions in the meantime, because it's going to take a bit longer. You see, this I love. When I see that the drawdown went down, this is crucial, because many people that didn't come to my lectures and other traders, they don't put so much emphasis. They say drawdown is drawdown. Well, it's not. 15% is not 13% drawdown. Sorry. And it's a huge difference, because this 2% is exponential. 1% in the pit is not 1% at water level. Okay? It's very costly. When you're already losing 13% of your account, to go down to 50% hurts much more psychologically and in mathematical terms than going from 3% to 5%. And it's also 2%. Okay? I explained that because we have basically an exponential function. And if you remember, and for the new guys, you should really remember everything you can do to reduce the drawdown is much more valuable than earning 10% more. Reducing the drawdown 2% is 10 times more valuable than earning 10% more. Believe me. Well, I've been 7.5 years around. I've lost 5 bigger accounts years ago as well. I don't lose accounts anymore. But it has been a very, very tough experience to deal with the drawdown. And I need to be honest, you know, because many people, they tell you, yeah, I only earn whatever. Well, I lost. And drawdown is the main thing you need to watch at, and in optimization as well. Okay, so when I see here 13%, I love it, right? Even if you say, okay, it's 13.6%, but it's 1.5 less percent than 15%, and it's very valuable. And I'm earning the same. I'm earning 146%. I'm earning 143%. Well, to lose 3%, to earn 1.6% in drawdown, to not go so far down in the pit, it's very valuable. Let's watch the curve. Obviously, beyond 16, it makes no sense for the euro dollar to optimize it. Okay, so I'm going to stop it already, so we don't waste more time here. I'm going to order again. You need to reorder sometimes by profit, or this time I'm going to order by profit factor, and I'm going to choose one that here it's very good as well, because look, the drawdown. But I'm losing here well, I'm earning, I'm going to watch it. I'm losing here a good chunk of money, which is 146%, 128%. It's like 18% over 9 years. It's 2% per year. But the drawdown is lower, and it's very efficient. I'm making $10 per trade. I'm going to remember where I was. I go back here because sometimes I don't remember. I never write it down. I was at level 6. Okay, it's telling me 1. I need to remember the number 6. Okay, I'm just going to watch the curve. And I'm going to show you something new which we haven't done yet. Why it's taking so long? Okay, I like to watch the curve forming. I definitely prefer this curve. And I'm going to do something which is very important. I'm going to watch the last year. Even better, I'm going to watch the last 6 months. And this is fantastic in MetaTrader. I can play back and forth. I'm going to watch the last 6 months only. Maybe they're good, maybe they're bad. They're profitable. They're extremely good. I didn't touch in these 6 months. I didn't cheat on myself. Some people are cheaters. They show you systems. They show you the last year of back testing. Even professionals. It makes me so angry when I see people selling signals only 1 year long. You know, it's actually not okay, you know. And this is 6 months within 9 years. And it looks great. And I'm going to show you a little trick. It makes 12% in the last 6 months, which is amazing, with a reasonable drawdown, which is 5%. And this I showed you in the slide the other day. Remember? I told you, you must have, the last 6 months must be good, the last 12 months must be also good. You remember that, guys? Because I don't have the slides here. Do you remember that? I told you, it must be not right. You must have a good last year. Some people remember that? Okay, I hope yes. So it's very important the last 6 months. And I can do one thing now. I can watch the other set of parameters, the original one. I click on it twice. I leave this last 6 months one more time, and I compare how it was. And definitely the new parameter is better in the last 6 months because it's kind of stagnated, you see, the last 3 months, while the other one was looking better at the end, you see? So this may be one reason to take the last one. I'm going to watch also, but I don't optimize ever just 1 year. I watch the 6 formal months are not good. That means that I have big chances that this parameter is going to go well in the next 6 months because the last 6 months were quite good. Okay, I could choose another one in between, like left value 2, which is a very low drawdown, makes also very good money. And sometimes the choice is not so easy. You see? This is not bad either. Let's do the last 6 months again. I put 1.5 years. It was a mistake. I should have put there. This is very good. This is even better. 14%. And 1.61 just in the last 6 months. The last 83 trades, it's right 71% of the times, which is fantastic, right? Okay, go for this one. You see, I earn a little bit less money, but I have an incredible expected payoff, $10 instead of 9. You remember? I have an incredible profit factor, which we'll teach in another lesson why profit factor is so important, and I have quite good earnings. Okay? So I'm going to choose this one, and I'm going to go back to the whole period, and I'm going to go here, 2007, 1st of January. You guys are a bit silent. You okay? There's nobody in the chat. Perfect. It's very difficult. I understand it's the first time you encounter minor optimism, and that's great, Paul, so you're listening how much. It may sound very foreign when you see the first time, and the way we work is very foreign because we really take very long data. We take 9 years of data, and you say, well, that's a lot. Yeah, otherwise I cheat on myself. I tried everything. Believe me, I tried 1 year. Lots of students do my education, and they say, well, this guy, it's too much work. They do 1 year, they go to the market, they start losing money, and then they go back to what the teacher showed them, which is the rules I'm showing you now, and they understood they need to do the 9 years, you know, or the 7 years at least, because otherwise I don't find a pattern that adapts to the market for a very, very long time. My chances are much higher now that this is going to make money in the future. Okay, but it looks quite good from where we started. You remember where we started? Okay, and the idea is not that you just take my parameters. I don't mind. You can copy these parameters. You can copy right now 32, 23, 45, 17, 18, 2, 10, and the last 3 ones. I don't care. You can trade them tomorrow, but the point is that you learn to do it, right? Because I'm not going to be here forever doing this job for you. So we got here the all level 2. Now we are going to go for the top level. That's the upper band, the Williams indicator. And I'm going to go here again up to 65, which is a bit exaggerated. And this is going to be magical. This is going to really adjust it very nicely. And it's only the first, how do you call it, the movement of the orange, the first, I forgot the word, the first squeeze. This is only the first squeeze, I tell you. And when you do the second squeeze, you're going to get even better parameters. This only happens with a very robust trading system. I invite you to do some trading system of your own, squeeze it, and do it really systematically. Do it till the end. And for me, this is fun additionally because I love numbers and I love logic. I love understanding what happens with the Williams, what happens if I move the sell level, what happens if I move the buy level, how does it affect, how does it combine with the market. Then I love going to the market and comparing things. I don't do always 3 full squeezes, Dave, because I don't have always that many good systems. Let's be honest. What I do always is 2 squeezes. Always. Even if the system doesn't give any juice after the first squeeze, after the beginning of the second squeeze, I will do it. At least at the beginning when I start to know the system. But we are at a point we know exactly where to stop on this system. I mean, we've been trading. It's the system we use for education. Also because it trades very well. I had a guy in a webinar yesterday, and they came only for the free education. He's trading okay. Of course, he only trades $0. I mean, I say just invest a little bit in yourself and you can trade it on because when the people come to the paid education, they will take home 200 sets of this trading system because everybody's going to trade it in different pairs. They're going to be supervised by us, and when you finish the course, you take a pen drive with all the work from all the students, you see? And we have 12 computers here in the trading room, and everybody is going to work either alone or in teams of 2, and I'm going to put you to work big time, you know, and even fast. You need to learn to do this fast. Okay, so this didn't make a big change. I expected more, to be honest. Maybe I'm already quite close to the optimum, and it's losing money actually already, you see? So it makes no sense. I'm going to stop it. Well, it's very interesting. We could think, why is it losing money? You know, after a certain level, the internal formula, I could even deduct the formula, but I rather don't give you the idea. It just makes it a losing system. Okay, so I'm not going to touch beyond that point. When you go below 10,000, you see, you're below your initial capital. You're losing money. I call this below the water. It's a concept I developed in optimization because what we have here is the water level, right? I should paint it blue. And everything which is beyond the water level, right? We have, for example, how is this called? The Mariana Island. They belong to the United States. There is the deepest point on Earth. I think it's minus 16,000 meters. And the idea is that you can, sometimes you start with a trading system here. You're losing your full account. Mariana Trench, thank you. Yeah, so sometimes you start in the Mariana Trench. And some people say, what a bad trading system, right? And it's not true. Because if you're a master in optimization, I could give you, I mean, we have so many good optimizers that pass through our education, and I give them really bad starting points. This is part of the course as well. I give you a very bad starting point in the course because euro-dollar is really peanuts. What I'm doing now, once you have done it a couple of weeks, you become a master, right, through training and repetition. But what is very difficult if I give you, for example, New Zealand Canadian, go for it. I tell you. And it's one of the best pairs, and it trades incredible in AxiTrader. The spread on New Zealand Canadian is quite low. It's below 3 pips, I think, if I don't remember badly. 3.5 pips. Almost nobody trades it because it's a strange pair, but you can scalp it incredibly, right? The Kiwi Canadian, who would say, right? And you start here in the Mariana Trench, and you need to go upwards. For this, you need technique, right? Because if you're already in the profits, you are in the mountains, but when you start below the water, it becomes very, very complicated to go up, okay? And it's not that easy. Okay, so here we have the optimum area. It's very stable. It's something between 10 and 14. You see the top level, 10 and 14. I just can go here, put the net profits, go up, escape the Mariana Trench there. I'm not going to watch it. And from 10 to 14, this is the values. Okay, that's 14 has an incredible high drawdown, you see. So it's only one. It's either 11 or 10. You see? 11 or 10. I'm going to go for 10 because I have a better expectancy, higher profit factor, less trades, and I'm only losing 1% over 9 years. It's not a big difference. The drawdown is almost the same, 11.22, 11.45. So I'm going to go to 10. I'm going to put the new benchmark. I'm going to make here the new back test. I'm starting to like this curve. And I can do again I shouldn't do it every time, but I should watch from time to time, not every time, okay, for the last 6 months. Because that's part of another optimization method. We show you 3 optimization methods in the paid education. This is only the first one. And this has to do with what I'm doing, with watching where I shouldn't watch, which is called method 2, which is a more advanced optimization method. This is the first optimization method, which is basically climbing method, okay? So here we go. 10, we have only 3 more parameters to go. I need to rush because I would like at least to touch upon the trend system, which is a great trading system, which is the other part of the code. And if I don't manage today, don't worry, we're going to do more webinars in December. Okay, I already spoke with Axie, and it would be very good if you write to Ross or to Alex Flood and just drop them a line how you're liking the webinars, okay? And that will help so we do more webinars in December. So here we go, the bottom level, Williams percentage, okay? We do here start. Obviously this earns nothing. Sorry, mistake. I'm only optimizing the last 6 months. You see? That's a classical mistake. I didn't change the dates. I need to put here 1st January 2007. Just do it real fast and start. Don't ever optimize only 6 months. That's a plain over-optimization. Here we go. I don't have the benchmark. I messed a bit up. You see, I should have left always the benchmark of the 9 years. But it's good. I'm making all the mistakes we're going to make at home. So you already see them. I make them. Okay. It's very good. 140%. You see, with 13% drawdown, 138 with 11% drawdown. I like this much better. This even better. 141% with 11% drawdown. And if you remember, we were already at 90% drawdown, not very at the beginning of the lecture today, right? And we're already at 11% drawdown, earning more. So I think that's going to be the optimum. Very little change. It's obvious. It's when you squeeze the orange and you are already almost 4/5 of the turn, the juice is going to be less, right? And we're already squeezing for a while. So it's obvious that the changes are not going to be so big as before. But any change in the drawdown and any change in the earnings is always welcome. And we are getting now almost $10.7 per trade. And I'm going to explain this very important value regarding recovery, but that's the matter of another lecture. So I think I'm going to stop here. And I'm going to check what the benchmark was because I got confused here. I was originally at 13. You see that? I was originally at 13. I'm going to put here so you see that properly. This was the original value. And I'm only optimizing this value. That's why I have here only one click. If you put 2 clicks, you're not doing hill climbing. You're doing something else, okay? Some people, by mistake, put 2 values, and you recognize that very clearly because you will have here 1024. Once you combine 2 values, MetaTrader will give you, I lost the value. I need to repeat that. Okay, but it's good that all this happens to me. You see, okay, 4,000 combinations, but when you have too many combinations, you have done a mistake. You have clicked 2 values. You see that? Okay? So just watch every time how many values you have. I'm going to repeat that. Sorry, I think the value was 10, the one I chose. Okay, I have it in memory, you see? Great. It just remembered. And I stopped there. So I have 66 values. You see that? Don't worry, we'll try to put the videos tomorrow. A bit of time. Okay, here we go. 141, 11%, looks great. Graph. Immediately I put it on graph. I want to watch how the curve is forming. I get a feeling. Not bad. The last 6 months. Very bad 2013, which is true because it was a very difficult year for Asian scalping. Why Asian scalping? Because the robot is trading at 9 p.m. server time. You see that here? Plus 2 hours, minus 1 hour London time. This is set up for European time. So it's 23 European time, 22 p.m. London time. which is exactly the opening of the Sydney session, and it's exactly the closing of the New York session. If you have problems with the sessions, we can do a webinar just only about schedules, because it's quite complicated sometimes to understand the schedules. And this is the hour when the EA is starting, but we'll get there. Okay, this is the last parameter. This is a temporizer. This is the loss I will accept after 300 minutes in the trade. If I'm 300 minutes, which is 5 hours, right, in the trade, I'm not earning, I didn't touch the stop loss. What happens? There is usually a very funny pattern. We could call it the Murphy's pattern, right? Let's say, for example, let's imagine here where we see it very clearly. We enter here a trade. I'm going to put it here. And I'm going to put blue because this is going to be a buy trade, right? This is a very clear example. You see I have here a buy signal. Do you see that? Here, the indicator would tell me here to buy, right? Yes or no? Blue. Do you see that? And I would buy here on the next candle, right? What happens is it never reached any profit target. It even went completely against. You guys that do manual trading know what I'm talking about, right? You enter a trade and it goes immediately in the opposite. This is called the excursion. Just learn this word because it's very important in automated trading. And we use it a lot, the excursion of the trade. And in this case, the excursion is terrible. We do a lot of excursion analysis, right? If I'm not wrong. Sorry for the bad writing because I'm on the laptop. So the excursion is terrible, but you know what happens usually in the scalping trades? They come very close to the entry point. You see that? Let me put the entry point in blue. I'm very systematic on that. Buy trade. If it would be a sell trade, it would be red. So this is a buy trade. You see that? And let's imagine the stop loss was here. And what we have here is one exit routine, exit rule, or exit routine additional. And what we do here, here's the entry point. Actually, the entry point should be gray, but okay, let's do it like this. Let's do it properly. The entry point, it's a buy trade. It's going to be blue. And the entry point is going to be gray. Sorry for being so precise with the colors here. And whatever, the target is maybe 10 pips or whatever, just for scalping, so it's going to be green here. Or 23 as we have now in the EA, right? I'm going to find a good green here, my goodness. Whatever, dark green, doesn't matter. And the excursion is very funny. It goes against, almost touches the stop loss, but it doesn't. It returns again backwards, again up, almost to the entry point, and then you go and you hit the stop loss. But if you count the hours, and this is a classical scalping trade, in this retracement, it's called retracement here, you should accept a loss. If you accept a loss of 2 pips, like here, you exit here on this point with 2 pips from the entrance point, and you're very happy because instead of losing 40 points or whatever it was here, in this case 24 points, you see, you just lost two points. That's what this parameter does. There's no intelligent scalper that doesn't have this routine. I've seen it so frequently. I've spied many systems. I need to admit that, right? Okay, not only the systems we develop, we have spied many other systems. Okay, just to see what people are doing. Okay, and this parameter is very useful. So this close distance means if I'm already in the market and I'm already 300 minutes and I'm losing, accept a loss of 5 pips when it comes back in the retracement. Do you follow the logic of this? Because it's not so easy. So do you follow that? Do you understand that? I'm going to put for a maximum of the stop loss 32 pips, right? Because I shouldn't accept more than the stop loss. And I'm going to put 0 here, right? Some people put here positive value, but you know what? You're going to lose money because when you're scalping and the excursion was negative, it means this trade is dead. This trade is dead. What are you doing trading this? Go out of the market. Smart people go out here on the retracement. Scared people go out here before the stop loss. That's bad trading, you know. And automated traders, I automate this, right? And they optimize it over 9 years. And they say, okay, what is the retracement I can accept? What is it? 2 pips, 3 pips, 5 pips, 8 pips? What of the times? Okay, so we go here and we're going to optimize this value. I'm going to put even a positive value. I'm going to accept 3 pips earnings, which makes no sense, but whatever. So you understand this value, and with that one, you will understand all the value parameters of the EA. So now your task is to do it. It makes no sense if I optimize for you guys. I mean, you need to do it at home. Get the EA, optimize it, put it 1-2 weeks in demo. If the demo is fine, you can go live. If not, don't trade it. Because sometimes the backtest is good, but the demo is bad. So it shouldn't be traded. But you can trade this EA with scalping. I have it on 12 pairs. I can even tell you which pairs are running well now. You see? It's almost a constant, but because we're very close to the stop loss, right? That's what bad traders would do. They would say, oh, accept 22 pips loss. Why? You will see now, the closer we get to the entry point, the more money we are making. You see, already 2% more. Look at that. 18 pips loss, it's better than accepting 29 pips. So we have here, it tells me that majority of retracements, there are being many retracements done at minus 18 pips. Why? Because the euro-dollar moves like this historically. It moves back in a retracement of 18 points on scalping. That's it. That's the statistic, right? And we go up here. We have already here some interesting results. Minus 18, minus 17. Let's go a bit up here. And you know what? It's making even more money here. You say, well, it's little money, but you know what? I'd rather lose these 9 points than hitting the... It's also psychological, you know. It's better it takes 9 pips loss than being in the trade. And imagine if you are with 10 pairs, right? You'd rather go out. So it's something between minus 8 and minus 9. You see, 0, minus 1, and 0, if I would wait for the entry point and to close, do you see 0 there? Let's write, let's order here. 0. 0 is terrible. I only make 97%. So I rather go out sometimes in losses. You remember the famous sentence of cut your losses short and let your profits run? That's what we're doing here. But we are automating it and we are optimizing it. So we have 2 additional edges on what the sentence is about, right? So we are cutting the losses really, really short very early. After 5 hours, after 300 minutes, because it's an internal variable which is not externalized, it's just 300 minutes. If you have 9 pips lost, just go out. That's it. See how much it improved. I'm going to take 9 pips. I'm going to do the back test. And I'm going to leave a little slot for questions. And I'm going to close here. I don't manage to do the other EA today. Sorry for the technical problems. Yeah. Very good question, Dave. Yeah, the hour is left in regardless location because the hour is referred to this hour here, which is the hour of the server of the broker. So you would have only problems if you would change from Axie to another broker. You need to calculate this, right? But it's 21 plus 2 in this case, and that's then you don't change it. But let me tell you one thing, the beauty of this EA. Right now, I optimize it for Asian scalping. I did only 1 squeeze. If I have more time, the next day I can do even an additional webinar in December even for new people. I don't know how the new people are doing. They're too silent. Very scary. But the thing is that I can optimize a completely different hour. As a matter of fact, I could really start looking for good hours. And it makes no sense to put 35. My day has only 24 hours. I don't know your days. My days have 24 hours. And what I mean here is that the parameter should be 0 to 23, because 0 is 24, right? So I'm going to put here 0 to 23. And from this parameter set that I have before, I could check for other interesting hours, and I could treat the same bot. For example, 12 is not a bad hour, 1 is not a bad hour, always plus 2, 3 in the morning, 2 in the morning London time. Just add 1 hour and you get London time. Okay? And in the middle of the night, it trades quite okay. So, as I know, scalping, it's called the holding time. The holding time, which we shorten with HT, the automated traders, we call it holding time. Just keep this concept. It's part of another lecture, but holding time is the average time of a trade in the market, HT, okay? In scalping is normally 3 to 5 hours. Depending on the pair, euro dollar is faster. Pound, sterling, cable is going to be like 1 hour on average longer for a similar target than the euro dollar. Surprising, right? Because it's more volatile, the cable, than the euro dollar, right? But it's slower. You see here, 7 is a great hour. So I could come here and say 7, 12, 19. I could optimize again, and I leave you as a task to do that, and I can trade the same bot 4 times. This is an advice which is a lot of money. You see that? And because normally you will close the trades in 5 hours, and I could trade 7, 14, 19, and 23, or 21. And I will have a trade which is 5 hours, it will close. I will have another scalping trade, 5 hours, hopefully it will close another trade, and I'm using the whole 24 hours to make money. Totally different to a manual trader, right? A manual trader is a slave of his schedule. You know, one of the reasons why I started in automated trading is because I read Robert Kiyosaki. I don't know if you know about him. You guys know who it is? Rich Dad, Poor Dad. Well, we can talk another time. And I was looking really for assets. And an asset is something that puts money in your pocket without you working. Of course, automated trading involves a lot of working, but in the long term, in the long run, you're going to work probably a bit more than in manual trading, but you will create assets. In trading, you stop being an employee in manual trading, but you become a slave of the schedule. That it doesn't happen in automated trading, you know. I do one robot at 7, another robot at 4, another set, sorry, and another set at 7, and they are different traders. You know, see, I'm creating 4 traders here, everyone with a different set of parameters, because I would need to re-optimize the schedule. You see that? And I would get 4 different sets, and I have the robot trading almost all the day long. You see, that's one robot. And I'm only doing now the euro dollar, but I can optimize this bot. Now, right now it's running well in 12 pairs, but I could try on 30 pairs. You see? So I create assets. That's one of the reasons to become an automated trader, guys. I mean, are you going to be a slave of the screen in the next 5 years? It's very beautiful when you start, right? Oh, you scalp, you love it, you make your first $100 bucks, you love it. But, you know, I prefer to have assets. I prefer to have robots that work for me. You see? It takes a lot of involvement, yes. It takes a lot of education, yes. But in the long run, I'm going to have here 4 guys, four sets, which is the equivalent to 4 people trading the same strategy with different parameters all day long. I'm not going to be able to trade at 7 in the morning, at 14, at 19, and at 21. I'm not Superman, right? How long can I do this? 24/5? Never. You can either trade the morning session, you can trade the New York opening, you can trade the New York close, you can trade different things, but you cannot trade everything. You cannot scalp in the night. It's impossible. It's impossible, right? So I really highly recommend that you consider algorithmic trading as a profession, or at least to become good enough, so you can do an extra earning with robots. Okay, so that's it for today. I don't have the closing slides. We meet next Monday, and we meet tomorrow. Hopefully, you're gonna come to the around the clock trader. It's gonna be 12 hours. I'm gonna send you the link right away. Olga's gonna send you the link right away in case you didn't have it. And I'm gonna be closing tomorrow. I'm gonna be closing. It's a programmer. He's calling me. We had an appointment at 9 p.m. London time. So this is the lecture. I think it's gonna be quite interesting because I'm gonna talk about edge, and I'm gonna talk about edge from 7 different angles. And some of them you already know, like optimization, but some of them you don't know. So if you can't come tomorrow, it's going to be a bit later. It's going to be crowded because Simon told me it's already over 1,100 people registered. So it would be great to see you there. Okay, and as well, we will meet on Monday, and I'm going to show you a trading system that you can scalp in the Asian session in the London night at 10 p.m. 10, 11 p.m. You can trade it manually, or you can program it. Okay, so if you don't have any questions, we close the session. Yeah, everybody who likes this and one session in December, just drop an email to Ross Newell or Alex Flood that you like the webinars, and that will help so we program more webinars in December. Okay, you're welcome, Dave. The other people are welcome as well that are saying thanks here. Hope to see you tomorrow at 8 p.m. and Olga's going to drop you the link in 5 to 10 minutes. Okay? Thanks very much, and sorry for the technical inconveniences.